up, my fellow harmonic traders? Welcome back to Track the Harmonic, your ultimate destination for in-depth insights into harmonic technical analysis. I'm your host, Lord MC. We have an action-packed week ahead of us as we brace ourselves for a roller coaster of data-driven excitement as we gear up for a week packed with crucial economic indicators that have the potential to bring volatility into the markets. First up, we have jobs jolts. This report provides invaluable insights into the health of the labor market, shedding light on the number of job openings, hires, and separations. So this data from this report can offer a glimpse into employment trends and the overall demand for skilled labor. Next in line, we'll be closely monitoring the gross domestic product, better known as the GDP figures. So the GDP serves as a compass for a country's economic health, measuring the total value of all goods and services produced within its borders. So a higher GDP growth rate often translates to economic growth, while a lower rate might signal underlying challenges. And let's not also forget about the Personal Consumption Expenditures Report, better known as the PCE. This data provides insights into consumer spending patterns as a crucial component of economic activity. Consumer spending drives a significant portion of the economic growth, so making the PCE report a vital indicator for gauging consumer sentiment and economic momentum. So very key indicator to look at this week. Then comes the non-farm payroll report. This report reveals a net change in employment in non-farm sectors, offering a snapshot of job creation and unemployment trends. So its impact on financial markets is often profound as it can influence monetary policy decisions and market sentiment. And speaking of unemployment, we'll also be keeping a close eye on the unemployment rate figures. So this percentage reflects the proportion of the labor force that is currently unemployed but is actively seeking employment. So a lower unemployment rate is generally associated with a healthier economy, while a higher rate could raise some concerns. So lastly, what I'm going to be paying really close attention to this week is the Purchasing Managers Index, better known as PMI data. So this indicator provides insights into the manufacturing and services sectors, reflecting the sentiments of purchasing managers. So PMI figures above 50 usually indicate expansion, while figures below 50 suggest contraction. So this offers a glimpse into the sectoral health. With this barrage of impactful data on the horizon, there's no doubt that we're in for a week of potential market volatility. So if you like this type of content, don't forget to like, subscribe, and hit that notification bell so you never miss a future video. So before we get into the charts, I want to preface by saying I am not a financial advisor. None of the things I say in my videos is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the charts. So SPY here had a very interesting week. In my future videos, I had said that potentially a head and shoulders was going to play out into this week, and specifically the right shoulder, and that's exactly what happened. This came up to test a 50 SMA where you created that top right of the shoulder and you came down and closed just slightly above XA at 436.31. You did on Friday fall below that, but you managed to close above that. So what can we expect here harmonically off of this bearish crab pattern? You're still looking at that head and shoulders here. So it'll be interesting to see if it can maintain this level of 436.31. If it doesn't, I'm going to bring my drawings and my lines here, so I know there's a bunch of things going on, but bear with me. If SPY is not able to hold this XA here at 436.31, harmonically speaking, the next level it would test potentially here is target 1 at 419.74. I do believe that if you see this trend line here that I've drawn down, this is basically the 2009 lows for when the market crashed from the 2008 financial crisis there. So this line comes over here. So if SPY doesn't hold above 436.31, the next level I'd be looking at to see if it tests here is around 425-ish. Should it not hold support here, then I could assume that it potentially comes and fills this gap here around 423 and change, test the 200 EMA, which is slightly around 421, and then 419.74. So if it manages to catch support above XA here and invalidates the head and shoulders pattern, you could look to potentially break above 443.75 and then 446.83, which would be bullish again for the SPY, and then reclaiming 451, filling the gap above at 455. So in my opinion, there's two ways to look at this potential head and shoulders, right? What level would that come down to? If you break the neckline, usually you take the top of where the head was created and you bring down to where that neckline is, and you bring a trend line, and that's how much the movement would potentially move down to, right? And then there's a traditional method where you could come in, take the fib extension tool real quick. I'll just cover that fib extension tool to the top of the head, back down to where the right shoulder was created and the peak of the right shoulder. So you'd be looking at maybe the 618 and the 100% retracement levels there. So the 618 would be the 427, and then the 100% would be at 417. This is known as a dynamic method, one way to potentially see what a head and shoulders pattern could look like to hit certain targets. And obviously the traditional method would just be to take the high of where the head was back to the neckline. So we'll draw a neckline here, the trend line here at 436.31. You bring down where the neckline is, and that comes and tests right at 200 SMA at 412. So that's what it could potentially, doesn't mean it's going to, but we'll see if that is the case with SPY. SPY, you did close on Friday with the hammer candle here, so we'll see if there's a continuation, as the HSI did cross, so you could maybe retest give another shot here at 443.75, which is a key level now, right? So we broke down from this key level when we came down from 443 to 436. You tried to reclaim it back on Thursday, failed with a lot of volume, and you came back down. So this 443.75 will be a next level to look at to see if potentially the SPY can break above for it to be bullish again. But if not, I do think there's more potential to the downside. So if we look over on the weekly, we did generate an HSI dot on 3 weeks ago, so it's definitely seeing that this is a potential inverted hammer candle. So we'll be looking at here at 433 from this bullish deep crab. This 433 would be the next level where the 21 EMA would be, and if you lose that, obviously, like I said, you're looking at 425. The 50 EMA weekly is at 419, which provides the same level here at target 1 at 419.74. So it's going to be interesting to see what SPY here does into this week. Jumping over to the triple Qs. So triple Q, similar setup here to the SPY. Obviously on Friday you did generate a hammer candle here, and you stayed above hop here at 361.07. Kind of a wonky head and shoulders, but it's there. So the next level I'd be looking at to see if the triple Qs can get above here is above the 50 EMA. Right now you did lose a 50 EMA during the week. You reclaimed above it, and then you got smacked down from the 50 SMA, and you closed just below the 50 EMA. So if the triple Qs is not able to reclaim the 50, and specifically the 21 EMA here on 366, and loses hop at 361, the next level harmonically I'd be looking at is 337. Fill that gap there just slightly above 333, right where the 200 EMA right in the middle there. So the 200 EMA could serve as support at 335. If this continues to the downside, you have BC here at 326, and then target 1 at 306 to complete the type 1 reaction. Right now you can see that the HSI is flatlining, so it's probably consolidating here to see what the move is. For that could possibly be when PCE comes out, or on Friday when all the data comes out as well. So PMI, we have non-farm payrolls on Friday, and I believe the unemployment rate is on Friday, if I'm not mistaken. But for the triple Qs to come up back up here, you need to be I think my lines disappeared for some reason here. But yeah, if for continuation to the upside for the triple Qs, you need to reclaim 366 and then 370, and then maybe you could see back again to 385, and then test a double top here maybe at 388. But it's too early to tell if that's going to be the case. Right now you do have on the weekly, you do have a bearish alt-bat pattern here where you did generate an HSI dot, and it's looking like it's potentially playing out to the downside here. So target 1 here is at 327.55. You could come back down here to complete the type 1 reaction, and then create a type 2 return back up to hop, potentially at 403. The HSI on the weekly is very interestingly oversold here, so if you get volume to the upside here off of this inverted hammer candle on the downtrend, that could signal a potential reversal incoming. So definitely this week will give us a glimpse if it is a potential reversal coming in for the markets here. So keep an eye out on the triple Qs. Jumping over to the Dow Jones. So the Dow Jones setting up for the potential inverse cup and handle here. So on the Dow Jones, it did lose a key level here for me here, where it did slightly close above on Friday, but I do have a level at 343.09 that it needs to stay and hold above. Otherwise, you could come back down all the way down to PT1 here, target 1, which is around 330, right, to complete that type 1 reaction. If it's not able to hold this, next level I'd be looking at would be 340, 338, and then 330. If it manages to stay and close above 343, the next level I'm looking for it to hold is 345.35, the 21 EMA at 347, where OPR and hop is at. And then for bullish case scenario, the next level for this to break to the upside would be 357, then closing the gap there around 360. On the weekly, if we jump over here, You do have this hammer candle on the weekly, but the HSI is calling for to the downside. So you might, if you lose this 343.09 level, will not hold the 21 EMA. The next level would be the EMA, the 50 EMA here at 337. So keep an eye out on the Dow Jones. Jumping over to IWM here. So IWM had a very interesting week where you did lose target 2 here, target 1 at 186, 187. You are setting up for a potential inverse cup and handle just like the Dow Jones, or a potential bear flag forming. So right now you're kind of sandwiched in between the 200 EMA and the 200 SMA, where you did close at 184 on the dot. So this is an indecision candle off of increasing volume. So if this is not able to stay above the 200 SMA here, harmonically speaking, the next level I'd be looking at to complete the type 1 reaction here would be all the way to target 2 at 178.99. Right now the HSI did cross the midline, so if it's able to manage and close above the 200 EMA here at 184.65, the next level I'd be looking at would be 186.12 and 187.19. Come back all the way up to 191, and then potentially come back for a type 2 return all the way up to 200. Very difficult to see that happening just yet, as you also have a 2050 crossover to the downside here on the IWM. So you could see maybe a situation where you just consolidate between 186, as it looks like it's been just what it's doing that, right? You broke above 180, broke below 186 here. You try to get above, you got rejected twice here, but you found support just slightly above the 200. So you could be possibly forming a bear flag here until the PCE data and all the economic indicators that come out this week for that final breakout. Either you break down or you're going to break up to the upside. So on the weekly, we do have also a hammer candle downtrend with average volume to the downside. So could this be a potential upside down V reversal here, as I like to call it? Who knows? It's too early to tell, but it did test the 50 SMA here on the weekly. So if you manage to close below that, it could get very interesting to the downside for IWM, whereas you could tell there's a bunch of wicks here. So maybe you find some support there on the 172, 170 range. So keep an eye out on IWM. Jumping over to XLF here. So XLF on the daily, similar setup to the IWM and the Dow Jones. You did generate here, it's kind of difficult to say, but some will argue that it's a hammer candle, some will argue that it's a doji. Whatever the case, it's an indecision candle in my opinion. So for the Dow Jones, for the financial sector here, you did have a bat pattern here where you did generate a type 1 reaction. So this completed the type 1 reaction all the way to target 1 at 33.68, where you did bounce and find support and an HSI error was generated. You did generate here an inverted hammer candle, and this is, in my opinion, again setting up for inverse cup and handle or a potential bear flag. The HSI did cross that midline, which is why you are generating the HSI arrow off of increased volume. So we will see if this is actually going to break back up to potentially do a type 2 return all the way to hop there. So if you manage to break above this and then break above the 21 EMA at 34.33, the next level I'd be looking at is XA at 35.58, where you did have a few 1, 2, 3, 4 touch points where you weren't able to break above this level. So if it breaks above XA, then you could potentially see 37.07. Otherwise, if you come and maybe attempt back again, the 21 EMA fell and retest 33.68 and finally lose that with volume, the next level to complete the type 1 reaction is at target 2 at 33.42, where you also have a gap to the downside here around 32.19, 32.16. So if we jump over to the weekly, it's an indecision candle as well. You can see this is more clearly a doji on the weekly. So, and the weekly has this opposite thing to the inverse cup and handle, where this looks more like a cup and handle playing out. If you find support here at PT2, you could potentially play out that cup and handle all the way to target 2, where it's at 37.27. Otherwise, you could negate this cup and handle, as the HSI is crossing to the below that midline, where you could lose 33.53, fill that gap like I said, and then 32.03 here at PT1 off of this bullish white swan pattern. So definitely keep an eye out on XLF here. Jumping over to XLE here on the daily. XLE, the energy sector has been pretty hot recently and just been kind of now consolidating here. So XLE here does have its bearish bat pattern, and it is managing to hold support above XA here at 86.43. So if it manages to close above the 90 EMA here, 87.70, I'd be looking at 89.36 and then 91.11 here Otherwise, if it fails to break to the downside, if it breaks to the downside, excuse me, below 86.43, the next level I'd be looking at is the 200 SMA at 84.81. Then to finally complete the type 1 reaction all the way to target 182.65. So right now you are slightly, just if you could slightly break above for a bullish case scenario for XLE here, if you could break above the 90 EMA, you are having a potential golden cross opportunity here on the SMA. So that could potentially be some bullish indicator here for XLE in the energy sector, as it's very hot as of recent. So the HSI did come back down here, not all the way to that oversold region or the oversold zone, but it is looking like it wants to maybe retest that midline here. That midline would potentially bring that to test hop here at 89.36, where it has had a few attempts here to break and stay above it, but ultimately has failed to close just above that. So if it manages to reclaim that, things could get interesting for the energy sector. Jumping over to Apple here. So Apple on the daily, you do have, let me just remove this for a quick second here. You do have a bullish shark pattern where you did come back down to almost hop, not slightly, but I'll say that this tested hop. The low here was at 171.96 and the hop was at 171.63. You did generate an HSI dot here, which signals a potential reversal, and you did get smacked two times off the 21 EMA here, right? So what can we expect here for Apple, as the HSI was completely oversold here, and the HSI arrow and dot here that was generated kind of failed, and you finally got the support and the reversal here from this HSI dot. Right now, on this push up to the 21 EMA, although you did almost reach that red zone here, that almost overbought zone, you did not generate an HSI arrow. But if it looks like right now it's flatlining, if it at the terminal bar here at 177.35, and if it manages not to hold this level here, you could potentially come back to that midline, and at worst, if depending on if you're long or short, you can come down all the way down to that oversold region, which would be potentially at hop there at 171.63 again. So kind of interesting to see where Apple is, or where Apple's gonna go to. The MACD just flipped to green here, but it's for me too early to say if this is actually shifting momentum. I would need a couple more days to indicate that there is. Obviously this could be lagging indicator, so it's better to look at to see if it's potentially breaking down this downtrend and creating higher highs, higher lows. Right now, for me, in my opinion, it's too early to tell. If we could jump over to the weekly here, the weekly has average volume as well. You did try to get above the 13 EMA, unfortunately you couldn't, and you did slightly close above the 21 EMA. So if you fall below 21 EMA, the next level I'd be looking at is 166 to test a 50, target to at 160. So we'll definitely keep an eye out on Apple. Jumping over to Microsoft. So Microsoft on the daily, Friday had a very bearish, Thursday was very bearish for Microsoft here, where let me remove this here. I think TradingView is messing up my charts here, but on Friday you did generate this doji candle here off of average volume, so it is having a difficult time right now reclaiming above the 50 here, and it did go and test on Thursday that 50 SMA there, failed, and you couldn't get back above that. So if Microsoft is not able to hold this, you can get very bearish here for Microsoft, back down to 304.26, and then maybe test the 200 EMA at exactly $300.50, which is that psychological number. If you lose that, then you're potentially entering the gap here. Maybe you test the 200 SMA here at 286, fill the gap around 281, then complete the type 1 reaction at target 2 at 272.45. This is obviously past the 30 bars that is recommended, but we could still look at these levels for potential support and resistance levels off the harmonic pattern. If we jump over to the weekly, same kind of situation with Apple. You do have this bearish Gartley, where you managed to hold above the 21 EMA, but if you fail to hold the 21 EMA here, the next level would be looking at is to test hop at 297. You have XA at 276, and then target 1 at 256.90. On the weekly, the HSI is oversold, so if this week comes in with volume to the upside, that could potentially generate an HSI arrow, which would push back up potentially to test down the line 349.67. Otherwise, you will come back down as well. So the HSI on the daily is kind of flatlining as well. It's in the overbought region, So you could come back up to that 50 EMA, 50 SMA, back up to HOP 330 and see if it has any type of support there and break above and hold that support. Otherwise, you could come back down. The HSI on the daily could still come and bring it down to maybe test BC here at 292.71. So we'll keep an eye out on Microsoft. Jumping over to Amazon. So Amazon does have this bearish bat pattern where you did generate this pattern here at terminal bar at 143.63. You came back down and you're looking to potentially come down for a type 1 reaction all the way to 119.87. You did manage to enter the gap and you managed to close on a hammer candle on Friday. You did test the 50 the 50 EMA there, and you still have yet to close this gap. So I'm going to bring this gap here closer to this level here. So there is this gap here just slightly below BC here at 129.99. So if you manage to fail to get above ABCD here at 134.17, the next level I'd be looking at would be that 129.99. Fill that gap. That gap fills at 129.84. If you're not able to hold above and stay above the 50 EMA, the next level I'd be looking at would be the 200 EMA there at 118, and that would complete the type 1 reaction, like I said, to 119.87. If you're able to reclaim 134 and take control and be above the 9 and the 21 EMA, just where this 134.17 target is, that'd be looking at 139.14, and then the terminal bar again at 143.63. Looks like the HSI is about to test that midline, and that's maybe where that 134.17 could be at. So if you get rejected, obviously we come down for that type 1 reaction. Off of the weekly, you have the bearish bat pattern here where you did generate an HSI dot last week and you failed to close above the 200 SMA. So like I said, this is similar. This is calling also for BC at 129.99 and then target 1 at 119.87. So very similar targets there from the 1 day to the weekly on Amazon. Jumping over to Tesla here. So Tesla on the 1 day here does have a bearish bat pattern, and it completed the type 1 reaction to target 1 here, where it did lose below target 1 and were able to manage and find support above the 200 EMA, and you generate an HSI arrow on Monday. So Friday last week you did test 212 and you came back up this week up to $240 and change. So I've seen people say that there's a potential bullish flag forming, but you can't also overlook the inverse cup and handle that is potentially forming on the macro. So for the cup and handle scenario, the inverse cup and handle scenario, the next level I'd be looking to see if we get rejected off is 243.32. If it has resistance there, the next level I'd be looking at again is 223.85, which is a very important level, which is slightly above the 200 EMA. If you lose that, then the next level I'd be looking at would be 218 and change, right where that gap is. And then if it fails that, you could complete that type 1 reaction all the way to target 2 at 177.25, which would play out the inverse cup and handle. Now, if it manages, for the bullish case scenario, manages to close above the 50, the next level I'd be looking at would be 253.80 for Tesla to be bullish once again. If you were able to break above 253.80, the next level I'd be looking at with 276, and then gap fill all the way up to 289.63. What's interesting here for Tesla here on the daily, because it was bearish last week, you did generate and it reached that oversold region, which you generate an HSI arrow. Right now you're approaching that overbought region on the daily for the HSI. So if you do manage to come back up to that 50 EMA, that would bring it much closer to that critical zone, the overbought critical zone, and potentially form an HSI arrow to the downside if volume to the sell side comes in the next few days, which would bring it back down and maybe give some weight to that inverse cup and handle, right? So very interesting. But one thing I found even more interesting on Tesla here on the weekly with this bearish bat pattern, you did complete the type 1 reaction, and a type 1 reaction is sufficient at target 1, and you did generate on the opposite sides here a HSI arrow with increased volume, right? So you were oversold and you generated this week that HSI arrow. So what you need to see, what the bulls need to see here, is to reclaim that 253.80, then you can see all these levels back up again for Tesla. Otherwise, you're going to come back down to maybe complete that type 1 reaction all the way to target 2 at 177, which is similar levels to the daily harmonic there. So keep an eye out on Tesla. Jumping over to Google. So Google, indecision candle, or excuse me, hammer candle above the 90 EMA here. So it has yet to come in here and try to fill this gap. Is compared to the blue chips, I like to say that Google is holding pretty strong here. So unless it starts to lose a 21 EMA and enter this gap again here, so I'm going to bring this down to these levels. I'd be looking at XA at 125.92 where that 50 EMA is at, then 120, then fill this gap around 122 and change, come down to BC at 118.98, and then complete the type 1 reaction. Right now you're flatlining in the HSI, so really difficult here for Google to pick a direction. If it manages to find support here, the next level to the upside would be hot at 138.18. If we go over to the weekly, you're still managing to stay above the target 2 here, so it's too early to say what Google wants to do here. It is consolidating in this range, as you can tell, from 134 all the way down to 125. So I do think it might break that consolidation period here during this week off of the economic indicators that we're going to get this week. So definitely keep an eye out on Google. Jumping over to Meta. So Meta on the daily, you did manage to close below the 50 EMA here. No current harmonic on the daily. So what can we be looking at here? If this is not able to close above the 50 EMA and then reclaim the 21 at 295 and 300, that specific psychological level, the next level I'd be looking at would be 238. The HSI did cross the midline but is now flatlining. This is a potential reversal candle. Maybe if we jump over to the weekly, you can see what next level to the downside is. Off target, off of this bullish crab pattern, target 1 is calling for $251.26. So the next level I'd be looking at would be maybe 269 to test the 21 EMA on the weekly. I want to see, I think there was a pattern here on the 3-day that it generated. And was it the 4? At the 4 hour here, so maybe we could look at the 4 hour. Off the 4 hour, you looks like you came back up to that type 1 reaction to target 1. So the next level would be XA at 269 and then hop at 261, which would kind of be where that the 21 EMA on the weekly chart. So some downside could come here on Tesla really quick if it doesn't find support. So definitely keep an eye out on Meta. Jumping over to NVDA here. So NVIDIA on the daily, obviously NVIDIA had earnings, crushed earnings. So what can we expect here for NVIDIA? It did create a new all-time high at 502.66, where it did create a bit of a sell-off there. Obviously people taking profits, and you came down all the way down to 451.17 and managed to close just above that. So there's definitely some selling pressure here. So if it's not able to hold above 451.17, the next level we'll be looking at to gap fill there, kind of close to target 1 at 432 to complete that potential type 2 return all the way down to hop at 389. Right now, if it manages to hold above this level, the next level I'd be looking at a test would be 480 and then 493.76 and then the new all-time high. So it's really hard and difficult to say what NVIDIA is doing right now because NVIDIA is very hot. So you obviously generated an inverted hammer candle here on NVIDIA, and too early to tell to see if this is a reversal candle to the downside or reversal candle to the upside. Volume came in obviously warranted with the earnings play, but yeah, take it day by day here with NVIDIA to see what it's going to do. So jumping over to Netflix. Netflix on the daily here does still have this ABCD pattern where you're kind of closing above, you did close above ABCD here. So the next level I'd be looking at, because it is finding some resistance at reclaiming above the 50 EMA. So if you manage to lose this level here at ABCD here at 412 and change, the next level we'll be looking at is to fill that gap there just slightly above around 35 and change, and then complete the type 1 reaction to target 1 here at 352.06. So to the upside for Netflix, next level you need to look at to reclaim is the 21 EMA here at 421.64, then hop at 429.22, and then potentially fill that gap all the way up to 508 and change. On the weekly, you did manage to test the 200 SMA and you were able to close above it. So you do have something that is a bit bullish here for Netflix potentially here, is that golden cross happening on the weekly. So if the market gives us good data, maybe that plays out into the next weeks and you could reclaim and fill that gap and then 518, 555, and so on. So Netflix is in a weird spot right now. So we'll definitely see if Netflix has some more upside there. So lastly, I want to cover here is going to be Bitcoin. So finally, Bitcoin, after a long period of time, was able to complete the type 1 reaction all the way down to target 2. It was consolidating, as you could just tell from the chart here, how many wicks it generated here, back and forth, a lot of chop, and it finally lost target 1 here, completed the type 1 reaction, and then it went and straight down to target 2. So right now, what can we expect here for Bitcoin? Right now, Bitcoin is potentially forming another bearish pattern here. So you do have a potential death cross on the daily here on the EMAs. So if it's not able to reclaim above target 1 at 281, and you find some resistance at 27.1, 27.2 here after 200 EMA, you could create a lower low. So I believe it was on the weekly. Give me 1 second here. The 2-day. The 2-day here, if it doesn't hold above 25.5k, the next level I'd be looking at would be 23.7 and then 21.4. So it's definitely interesting here for crypto. Right now, off the HSI, it's a bit oversold. I will say that on the RSI is a bit oversold. So if it's able to find some support here and reclaim the next level for this to be bullish again, is to break above 30,000. That's that level where it was not able to close above since mid-July here. You kind of retested it a couple times, but you came back down. So in order for Bitcoin to be bullish again, is to reclaim 30.2, and then maybe you see 31.8 down the line. But I'm going to be paying close attention here. Off of the weekly, you did lose a 50 EMA there, right? So the 200 EMA would be at 24.6, and that could be a potential level that it could go down to see and test to see if there's any support there. If there is, you can potentially start to create a higher high here, but too early to tell. The weekly HSI is a bit oversold, so volume needs to come in right now. Kind of the volume is a little bit on the lower side, so a lot of indecision here, in my opinion, for crypto. But that's it for me, guys. That's all I wanted to cover. If you want to catch me streaming every day, Monday to Friday, I stream over on Twitch, so the link to my Twitch is in the description box below. Having said that, I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow. Take care, everybody, and peace.